Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SEI Investments Co. quarterly report. SEI Investments Company offers a wide range of businesses and services to various clients across the globe. The company's services include wealth management, retirement and investment solutions, asset management, asset administration, investment, processing, outsourcing solutions, financial services, investment advisory, services, mutual fund management, equity, fixed income, and balanced portfolio management for separate client-focused portfolios, public equity, and fixed income investments. These services cater to a diverse range of clients, including private banks, institutional investors, corporations, not-for-profit organizations, hedge funds, and individual financial planners. SEI Investments Co. has seen an 11.36% increase in its stock price over the past year, driven by several key factors. A significant boost came from the company's increased stock repurchase program, which added $650 million to the authorization and signaled management's confidence in the company's valuation. Additionally, positive analyst revisions and upgrades contributed to investor confidence, with firms like William Blair and Morgan Stanley issuing favorable reports and raising their target prices. The company's strong earnings performance also played a role, as it beat estimates on revenues and assets under management, indicating a healthy financial standing that can drive stock price growth over time. The primary drivers of revenue growth for a financial services company are multifaceted and varied. Key contributors to revenue growth include investment management fees from pooled investment products and investment processing fees. Additionally, account fees and other revenues, as well as United States revenue, have also contributed to growth. The investment managers and investment advisors segments have experienced significant revenue growth, with increases of 12.7% and 7.1%, respectively. Furthermore, the company has seen increased administration fees from additional services provided to largest alternative fund clients, as well as increased revenues from services provided to collective investment trusts. Positive cash flows into alternative and traditional funds from new and existing clients have also driven growth. The company's ability to capitalize on market appreciation through increased investment processing fees and management fees has also contributed to revenue growth. On the other hand, revenue decline is primarily driven by a decrease in equity in earnings of unconsolidated affiliate, LSV, due to lower assets under management and client losses. Additionally, interest and dividend income have declined due to lower interest rates and invested cash balances. The company has also experienced decreased investment management fees from SEI fund programs, resulting from the shift towards separately managed accounts and other investment products. Furthermore, fee reductions in separately managed account programs and decreased average basis points earned on assets in SEI mutual funds have contributed to revenue decline. The divestiture of SEI Family Office Services and loss of Rubicon client assets have also had a negative impact on revenue. Net income and profit margins overview. The company's net income experienced a significant increase from 2024 to 2025, with a notable jump of 28% in the 9 months ended September 30. However, this growth was not uniform across all periods, as the 3-month period saw only a modest 6% rise. Profit margins also underwent changes during this period. While the net income margin decreased slightly by 0.3 percentage points in the 3 months ended September 30, it increased substantially by 4.9 percentage points in the 9 months ended September 30. The reasons behind these changes are not explicitly stated in the provided financial report. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. In 2025, the net cash provided by operating activities reached $481,264, a notable increase of $54,190 compared to the previous year's figure of $427,074. This positive trend suggests that the company is effectively managing its resources and generating sufficient cash to support its business operations. The company's debt level and interest expenses have undergone significant changes. Notably, interest expense has decreased by 23% in Q3 2025 compared to the same period in 2024, and by 8% year-to-date in 2025. However, despite this decrease, net debt has increased by $240 due to a rise in total cash and cash equivalents held at consolidated variable interest entities. The company's new 5-year credit agreement with U.S. Bank National Association may have contributed to these changes, potentially impacting future debt levels and interest expenses. The financial performance of the company's segments and regions varied significantly in 2025. The investment managers and private bank segments stood out as top performers, with revenue growth of $594,165 and $423,157 respectively, and segment profits of $229,384 and $68,921. On the other hand, investments in new businesses was a poor performer, experiencing a significant revenue decline of 48% and an operating loss. The United Kingdom and Ireland regions also struggled, with revenue declines of 82% and 14% respectively. In contrast, the United States, Canada, and Luxembourg regions showed improvement, with revenue growth of $40,038, $65,530, and $4,263 respectively. These results indicate that the company's focus on established segments and regions may be paying off, while investments in new areas require further attention to improve performance. Management's outlook and strategy for the company are focused on addressing regulatory requirements, improving governance arrangements, and driving business growth through expansion efforts. The company has a strong cash position, with sufficient funds to cover operational needs, mergers and acquisitions, and stock repurchases for at least 12 months. Key areas of focus include expanding the SEI Integrated Cash Program, continuing to incur acquisition costs for Stratos Wealth Holdings, growing revenue from assets under management, administration, and distribution fees. Increasing fees from separately managed account programs management is also anticipating a gain from stock-based compensation expense and has authorized the repurchase of up to $6.728 billion worth of common stock. However, the company faces increased regulatory activity and scrutiny, which may lead to material adverse effects, fines, and changes to business processes. Despite this, management believes that the probability of any litigation having a material adverse effect on the company is remote. Acquisitions and divestitures. Overview: the company has made notable acquisitions and divestitures in recent periods. In terms of acquisitions, the company has recorded significant intangible asset purchases, totaling $3,168 for the 3 months ended September 30, 2025, and $9,774 for the 9 months ended September 30, 2025. On the other hand, the company has also made divestitures. Notably, it terminated its client relationship with Rubicon Wealth Management, page 27, and transferred client assets to Orchard Park Bank accounts, page 27. These transactions indicate a strategic shift in the company's business operations. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, totaling $123,341 in 2025 and $120,338 in 2024. Additionally, the company has also engaged in share buyback activities, purchasing and retiring common stock for a total of $527,491 in 2025 and $252,889 in 2024. That concludes the financial summary for SEI Investments Co. Feel free to comment below, and I will be happy to answer them when possible.